In today's session, I'm going to talk about this one particular step in my PSS model, which is step 3. And I know many traders spot the liquidity sweeps, but turn them into the A plus setup with this one key confirmation is really important. Today, I'm going to break it down, this exact confirmation live with you guys. And what you can expect from today's session is the real-time examples of the trades I took in the whole December, but I'm going to go through, a couple 3 or 4 examples, step-by-step method to spot the sweep, confirming with this one signal, and then execute with pure precision. And let's dive in and then talk about this one particular rule that is very important. Anybody can go and look for this liquidity sweep above the prior swing highs or below the prior swing lows. But to actually turn that into a good setup, to make money out of this setup, you need to have some set of rules in place. And then today is exactly what we're going to do. Is most of you know that there is always a liquidity above the prior swing highs and below the prior swing lows. And what we usually do is price goes higher, price close back below, and that is the liquidity sweep. And what most traders do is they just try to go and short right away as soon as they see the liquidity sweep, and in the next candle, boom, another move higher, and then they get stopped out, and then maybe price then starts to go down. So to just remove that factor, where you're getting stopped out and where you're getting back trades, SBP comes in. You need to understand is that price needs to break below this prior or recent swing lows on the intraday time frame. Let's say if you're trading 1 minute time frame and price is making higher highs and higher lows like this, and we got the sweep of that prior swing highs, and right after that sweep I want to see price breaking that recent swing lows. That is going to be our step number 2, directional shift, but this is not we're going to focus on. And right after that confirmation, we get another pullback into this. And once price breaks that, goes again, that is our confirmation of structure breakpoint. Now, this is clearly showing me that now sellers are clearly taking control in this move. And now this liquidity sweep becomes the protected highs. Now that means as long as this highs is protected, we can go ahead and place a trade targeting this external or internal range liquidity with a very tight stops. And this is exactly how I've been trading live. Those who come to live, you guys see me trading this exact same setup, and I will show you tons and tons of examples too. You can just let me know the chart name, and then I can go into 1, 5, or 15. This exact setup you can see in all of the commodities that you trade or on any time frame. Before reversing, price will always make this one formation. So now you know that it's pretty clear with that example too. In here we got the sweep and price breaks the recent lows, and then that first leg is confirmed, moves higher, and boom, making another lows. So all you have to do is look for lower lows and lower highs, and then price to make another lower low again. That is your SBP confirmation. But when do we enter a trade? So that is the main question. So you enter a trade when price makes this formation, lower lows end. So this is the lower lows. So this is the lower highs, and this is the lower low again. So as soon as I get this confirmation right here of lower lows, I'm gonna enter the trade right away, and this swing highs becomes my stop. So there's also a fourth step in there. So let's say if this lower low is way extended past this lower highs, that means my risk is going to be a lot in this, and then I don't want to do that. Most of the time when I enter a trade, my risk is very small. It's usually at high of the day or at the recent swing highs or at the recent swing lows. So after this BP, I want to see price pull back again and into this high value zone, which is around 50% and 61.8 retracement zone. Again, this is optional, right? It's only optional because we already got the confirmation. We only use these steps to minimize our risk on the trade and get a little bit of higher reward too on the setup that we are trading. Again, if I see this and this is not far away from this prior lower highs, I'm just going to enter a trade right away because I do not really care 10, 20, or 30 cent pullback when I know my target is going to be this big right here. So this is the main confirmation that you want to look for: structure break, lower highs and lower lows back again. So now let's look at a couple of examples that I took at trades this past month. Let's look at this example. Just happened yesterday. and why I did not take this exact trade of the liquidity sweep, but there was a liquidity sweep, but there was no trade for me in this one zone. If you see, price formed this internal range liquidity high, and this was opening range high, and this was the opening range low, and price went higher, swept that, and closed below. So that was a pretty clean liquidity sweep. Anybody who's just starting to learn about liquidity sweep, what they're going to see, okay, there's liquidity sweep, I'm going to go short it right away. But that is not true. You're going to see tons of liquidity sweeps every single day, especially if you're trading 1 minute time frame. 1 minute or the 5 minute is the most recommended on intraday time frames, especially if you're option trader, right? So most of the traders, those are new, they want to see this liquidity sweep. Okay, bulls always talk about liquidity sweeps. That's a sweep. Boom, I'm going to short. I'm going to target this massive gap fill, and then price is going to go back. But that is actually not true, because we never got any confirmation after this sweep. So let's say we got this sweep. You need to mark your levels right away as price is progressing. And now we mark this low right here. So now this is the recent swing lows that price made on intraday time frame. You see a 684.73. Price did sweep that swing highs, but failed to close below or even failed to broke that level. And we never got that structure breakpoint here, which is that lower lows, lower highs, and lower lows again. We never got it here. So that means that setup is actually not valid. And I was watching it live. I was like, there's no confirmation here. So there is no reason for me to alert on this setup to my team. And boom, new highs on the day. So now as price printing these candles on the right side, I need to mark my levels on the left side. So I need to be prepared of what can be the liquidity sweep levels on the intraday time frame. So I marked the daily highs, I marked the daily lows, intraday lows, or opening range highs or opening range lows on 15 minutes or 30-minute time frame. And also price made this another highs of the day, and that becomes also the high of the day or opening range highs if you're trading 30-minute candle. But I usually have first 50-minute opening range highs marked and opening range low marked on the first 15 and 30-minute candle, because price usually reverts after 7 o'clock. If you're in Eastern time, that would be 10 o'clock, right? Because that time 4-hour candle closes on NQ and on ES. And if you know one thing, the time frame alignment is also a key thing in here. And for the time frame alignment, I will host one complete different session. So a reversal comes after the candle closes, that we all know. I've talked about it a lot. And now price made this intraday swing highs on this candle, and then we got this rejection. And right after this rejection, but price really didn't break anything on this. There was no sweep. If I go in the back, there was no sweep of the high of the day, or there was not even a recent low break right here. So that is actually not a clean setup for the shorts. So price just went sideways, and then boom, we got this another highs. So now that after this whole move, I got this swing highs, I got this opening range highs, opening range lows, and also this internal range liquidity lows too right here. So these are all the levels that I marked real time. That's how you should be doing as price is making new candles. So after this, I got this confirmation of the sweep in this candle. You see that's a pretty small sweep, but let me zoom in a little for you. You see now that is a pretty clean sweep of that prior swing highs. So now at that point, I was pretty convinced that now this liquidity sweep might be the one that can give us an actual good trade or A plus setup on the day, because price pushed high a lot on the day, and even after a gap up. So now price is above this swing highs. That means a lot of breakout traders are going to trade higher from here, thinking it's going to go higher. And second, a lot of people are long above this opening range highs too, thinking it's a breakout and it's going to go higher. And the one thing that I want you guys to understand is that if you are new to trading or if you are still struggling, is that if you go back and see most of your stop losses that you guys took is going to be where your entries are definitely going to be above the swing highs or above the swing lows. And a couple moments later, you guys get stopped out. And the same thing, the most of your profitable entries that you took, most of the profitable trades that you took this year is going to be the liquidity sweeps, even if you noticed or not. But if you go back and look, it's always going to be a liquidity sweep involved in your profitable trades. And if you're losing, that is also going to be the another part, right? So you need to understand that if you just started trading, is most people have that thing, it's just built in them that, okay, price is above swing highs, now it's just gonna keep going higher, and then this is what we do. Price open makes that first 30-minute opening range, and if 5-minute candle closes above that opening range, it's gonna keep going higher. 5-minute candle closing below, and it's gonna keep going lower. So if you think trading is that easy, and if everybody can trade a breakout, then I would say 90% of the traders would be successful day traders. But price actually moves after the breakout, but not to the continuation, but to the opposite side. So this is what you need to understand. You don't want to be a breakout trader. You want to be a fake out trader. And then you want to be trading liquidity sweeps, because the only reason that you want to be trading fake out instead of breakouts, because you want that low risk on your trades. If you're entering a trade looking at something, I'm entering a trade and my reward is going to be this big, that means you're already losing in that trade. You always want to look for how much risk I'm going to put into that trade and how much my risk is going to be. When I look at any sweeps or any trade, I always look at my risk is just going to be this much. That means if next candle closes above my liquidity sweep candle, I'm out, right? And my target is going to be this big, always. But for the breakout traders, let's say if you're a breakout trader, and let's just think how breakout traders think as they're entering the trade. In here is a breakout trader would think price is above this level, I'm gonna go long. But if you look at the price, where the swing lows, stop loss is always going to be at the swing lows right here. No matter if you went long here, here, or here, or here. So now this is your stop loss is going to be. And most people are chasing longs above highs here or here, but everyone's stop loss is this big right here, all the way down here. And you think market's gonna pay them, and you think you can survive with this big of a stop loss in the market? You definitely cannot. That's how its market is designed to stop most traders out. And it's gonna pay the smart money like us, how we operate with that PSS model. Right. So now back to the topic, back to the example that I was showing, that exact trade I took live in front of hundreds of people is swept the liquidity right here. Now I'm not looking at the breakout. So we got the sweep, and in the next candle, price made that swing lows right here. Now, most of you will say this was the swing lows on the intraday. Now, if you see price made this recent lows right here. So now if you see price making higher highs, higher lows, higher highs, and higher lows. So now price made that higher low. So now that is the recent swing low that I'm watching. If price breaks this level, that is the confirmation of this step 2 directional shift. Price breaks that right here. So now that is the confirmation that I got. Finally, bears are taking over. This is the first time in this uptrend here that price broke below the recent swing lows on the intraday time frame. That too after the sweep. Now I need to be more attentive and need to be looking more that so we can get into the trade. Now we got that pullback. Boom. What do we got? Lows, highs, and another lower lows. Exact same thing. Lows, lower highs, lower lows. Exact same thing. We got it here. And at that point, I was like, okay, guys, I'm in my trade. I averaged down to my trade. Now let's ride this position. Now, if I play, it's one more candle. You see how price broke below these levels too. Right after this confirmation, it actually didn't flip. And now where my stop's going to be, this is exactly where I took my trade, alerted, and I put my stop loss right at the swing highs. The liquidity sweep high. And if my first target was this internal range liquidity. So now you see my stop loss is basically nothing on this trade. That was like, what, 20% stop loss on this one trade. And my reward is what, too big on this. So just a low volume gap in here. And then we also have this massive gap too in price. So that becomes our external range liquidity low, right? So if price fails to reverse of this internal range liquidity, where it's going to go next? Where's the next stops at? Right here is the next stops at. So now remember when I said that every single breakout trader, those who went long here, here, and here, where the stops at the swing lows. Now what they're gonna do is all the breakout traders, and the one thing with all the unprofitable traders, I would say 90% of traders who are not making money, is they are so consistent with holding on to their losses, but not their profits. They always gonna follow that this is the level I'm going to take my stop loss at, right? And they are so strict about it, in taking a stop loss at one particular level. But when it comes to taking a profit, they really don't care. They see 10, 20%, and then they take it. So now with this psychology, most of the people are trapped here, and where they're going to take the stop loss right here, and where the price is going to go to their exactly to their stop loss. So the market is going to stop them out, and then probably going to reverse back up again, right? So that's how the market works. You need to apply the TA, and then you also need to apply a little bit of psychology too, of how 90% of people think of. So you can actually go to their stops, run them, and then get money from their stops into your bank account, right? So now that's it exactly what do we do every single day. And this is how I designed this system. Boom, 1, 2, and 3. It's going there and boom. If you look clearly, now it's keep going there and then it tried to reverse, but we never got the sweep of the lows. So now it's heading to that external range liquidity lows right here. And then most people who went short right here, right, went to that external range liquidity, boom, swept that lows. Now the same thing, now you imagining on the opposite side. First, we were actually looking at the short side, that how bulls are trapped. Now, if you see, now we caught this move live. This massive move, we call that 500% move with a 20% stop loss. That's like a 1 to 10 risk to reward trade here, 1 to 20 risk to reward trade here. But the same psychology now we're going to apply for the bears. Change it to red. So now anyone who's like, oh, this is a breakdown now, this is keep gonna go down, this is a breakdown level, or let's say this was the breakdown level and price is just gonna keep going down. What's gonna happen now? You think market's gonna pay those late bears, those late shorts, those who already missed this massive move, just like the bulls who missed this massive pump higher, they're gonna pay them again? Zero chance, right? And price swept that external range liquidity. Now it trapped the bears on the opposite side. Now, boom, prices started to move higher of that exact external range liquidity, stopping out those late bears. Where they're gonna stop them out? And one thing that you'll be pretty surprised that I actually planned this live, in front of everyone, is that where they're gonna stop out is they're gonna stop out exactly at the swing lows where they put their stops at. So this is where bulls put their stops before, right at these lows. But now the bears who went short at the bottom, where they're gonna put their stops? They're gonna put their stops at internal range liquidity highs, which are these two levels right here. These two levels I was watching closely on the day. I was like, these two levels can give us continuation setup. First of all, I never trust the first leg higher. And second is that late bears are trapped. Now the early bulls are also in there. If you see, lots of liquidity comes in at one particular level if you look at it. So now we have trapped bears and early bulls coming in this leg higher here. And where they're gonna get stopped out, or where most late bulls gonna enter above the swing highs, right? So this is where the late bulls gonna enter, and this is where the most people are going to get stopped out on the opposite side. So this is a level we're going to get into a trade. And once bulls get trapped in this zone, where they're going to get stopped out right here, because that is their stop loss, swing lows, right? So if you think the market this way, I would say there's zero chance that your emotions going to take over, because you're purely thinking logically and you have a system in place, right? Just like this is the exact way my thought process is in every single trade that I take. So now let's play it. Now you see another thing here. Most people are now trapped here again. There's another leg that got trapped. We got the liquidity sweep. Remember what I told you here, right? In this candle, we got the liquidity sweep, but we never got the confirmation. But in here, exact same thing. We got the liquidity sweep, but price couldn't break below lows. Even it broke below lows right here. This was the low that broke, but we never got that SBP confirmation. That is the main focus point of today's class, is we need that SBP confirmation. Only then we can get into a trade. We got that low break, but guess what happened? That low break turned out to be another sweep for the bears. I did not enter a trade here. I was waiting patiently. I had this level marked, and if we go into 5-minute time frame, you see price at these two levels on 5-minute highs. So now after this, we had this level right here. So that means if price fails to reverse of this level, it's gonna go straight to this level. So that is a no interest area for me to take any trade. So that's how you're gonna mark your levels on the intraday time frame as price going. And now let's play it. You see how price stopped those early bears right here. And now its price is above swing highs. What do you think gonna happen? All the wannabe profitable traders gonna get into again after they get stopped out here. and they're going to get back in here. Price is above swing highs, price is breaking out. Now it's going to go back to highs again. But guess what? That's just not how the market works. And this is exactly where I looked for another short entry. We got the sweep of that internal range. I deleted that level. So now I got that internal range liquidity sweep. So that's my first confirmation right here. And then boom, we got that low break right here, and price now making lower lows, lower highs, right? And right after that, price failed to make new highs. Instead, it made a new lows right on this candle. You see this candle closed below that prior candle. Now that is our SBP confirmation right there. Sweep, DRS, followed by lower lows, lower highs, and lower lows again. So that is my confirmation. So now we can enter a trade. So now this becomes the protected high. Bears are back in. That means now bulls are trapped again above the swing highs. Now I'm gonna take a trade right here, put my stops at this swing highs, and I'm gonna target low of the day right here. Why low of the day? All the fake bulls have their stops and they're gonna follow their stop loss religiously. They're not gonna get out here or anywhere. They're only gonna get out here. And once they get out, price is gonna reverse back up again because that's how the market works. And boom, got in, alerted my round two to my team here. And right after my entry, boom, stock price started to go down, one, two, three, and another goes down. And if you look closely, I was actually interpreting this move candle by candle to my team is as price goes down, it just cannot go down in one single candle. Right? It just cannot. It's gonna trap more and more people. More and more people in a way is where they're gonna average down. They're gonna both gonna average down too. Right. So those who are leading their position, they're thinking as long as we are protecting this low, market can bounce. So that average downs is definitely going to come in here. And where it's going to come after some sort of confirmation, which is going to be above swing highs in as the candles are going. So in this candle, we have this internal range liquidity that's price made right here. Price started to break out of that levels, and then all the bulls like price is looks like it's reversing, it's breaking out again, and we are holding this zone here. If we average down here, it's going to go back up again. But guess what? That is another trap. This is what you see most of the time happen with you guys too. You see you are right in a position and it started back up a little bit, and then you FOMO in, and then you enter more size with the same stop loss, obviously. And then boom, your average down turns into red too, because you're not following structure here. It's just traps after traps setting up for you. And then again, that's how the market is designed to fake out the most people. And now they got trapped again here. That internal range liquidity sweep. This is where I alerted to my team. If you miss this move, this is again, you can enter here with the stop loss at this liquidity sweep candle high. So now let's play it again. Now trap one set, trap two is set again. Boom. They now they got stopped out. Now price is below swing lows, no sweeps, and then this is kept going lower and lower, and our puts went for 200 something percent on this move, right? So now you see it's the same thing. It's the same pattern, right? Now they are stopped out. Now they are out of the market. Now here's another sweep comes for the late bears, right? Those who wanted to short this leg but couldn't. Now they see the breakdown or breakdown of this lows here, and now they short it. What's going to happen? Market's going to pump back higher. So that is exactly how the market works on a day-to-day basis. Now this is a 1 minute time frame. If you go to 5 minutes, you will see the exact same pattern. If you go on 15, exact same thing. Daily, weekly, monthly, it just does not matter. That's how the price moves, right? So as a day trader, you always want to look for these external range liquidity levels. And one important thing is you also want to know in the back of your head where the most people have their stops at, because that is where it's going to go to, and that's where it's going to generate liquidity, trap them, and going to go to the opposite side. So you always want to look for a fake out trades instead of a breakout trades. All right, guys. So that is it for today. Hope you guys enjoyed the today's session. If you guys enjoyed the today's session, I take all these trades live every single day in my live premium Discord. In the morning for first 3 hours, I go live in front of hundreds of people and take these trades live. So if you wanna go check it out, there's a live 7-day trial in the link. You can click that and join. And then once you're in, I'm pretty confident that you're gonna be hooked and then you won't cancel. That's the guarantee I'm giving you, and all the pre members here can also vouch for that too. So with that, I'm gonna take a leave. Hope you guys have an amazing rest of the day. And I'll see you guys tomorrow. And Happy New Year.